This video is sponsored by Incogni. When one superpower fades, another one rises to fill the gap. That's not just true in geopolitics, it also applies to currencies too. Right now, the US dollar is under pressure. In April 2025, the IMF issued a stark warning. If global financial conditions suddenly worsen, we might see a reset of the entire international monetary system, and that could shake the dollar's role as the world's cornerstone. So, what happens then? Could the Chinese yuan step up? Or is it finally the euro's moment? Well, there are a lot of reasons to be optimistic about the euro right now. For starters, it's actually quite stable. While the dollar has been swinging up and down thanks to both political drama and economic uncertainty, the euro has remained steady or gained value. And politically, there's real momentum. The 5 biggest Eurozone economies, France, Germany, Italy, Spain, and the Netherlands, have just called for reforms to make the Eurogroup more agile. They want faster decisions on big priorities, like the banking union, which aims to make sure all EU banks follow the same rules and are backed by a shared safety net. And then there's the Capital Markets Union, a plan to make it easy for businesses to raise money across borders, and for investors to put their money to work anywhere in the EU. We actually have a video coming on this soon. And the digital euro would be a new digital form of cash issued by the European Central Bank and would cut dependence on non-European providers like Visa, MasterCard, or PayPal. Speaking of the digital euro, that project is now halfway its 2-year prep phase, and if all goes to plan, we could see a full rollout around 2028. And there's another piece of good news. On June the 3rd, the European Commission gave Bulgaria the green light to join the euro. Welcome aboard, Bulgaria. Now, before we dive into the second reason of why the euro is doing so well, a quick thank you to Incogni for sponsoring this video. Let me tell you about something that happened recently. I was checking my email, half asleep, when I noticed an urgent message from what looked like my bank. It said there'd been suspicious activity on my account, and I needed to click a link to verify my details. Now, I've seen enough phishing emails to spot the obvious ones, but this one had the bank's logo, the right formatting, and even my partial account number. I had to double check, even triple check, whether it was real or fake. And that's how close these scams get. And the reason they're so convincing? Because our personal data is everywhere. Data brokers collect and sell info like your name, email, phone number, and even your recent purchases. That data ends up in the hands of marketeers, spammers, scammers, you name it. And for a long time, there was literally nothing you could do about it. Until now. That's where Incogni comes in. Incogni is a tool that helps you fight back. It automatically sends data removal requests to dozens, sometimes hundreds of data brokers on your behalf. I've been using it myself, and it's surprisingly satisfying to get those confirmation that your data has been wiped from yet another shady database. So, if you want to reduce your risk of scams and reclaim a little bit of digital privacy, head to incogni.com/EU-made-simple or use the link in the description for an exclusive 60% off their annual plan. Now, back to the video. Another reason the euro is doing well is that the dollar is not. The euro recently slipped to 3rd place in global central bank reserves, overtaken by gold. But that's not as bad as it sounds. This shift says way more about the dollar's decline than the weakness in the euro. And the dollar is really struggling. Since the start of the year, the DXY index, an index measuring the US dollar's global performance, has dropped by more than 10%. Meanwhile, the euro's up by 13.5%. The main reason? Trump. We won't go into the details of the tariffs here. That's a whole other topic. But the key point is this. Trump's unpredictable trade policies have rattled global markets. Add to that his stated goal of weakening the US dollar to boost US exports. It's not just the currency either though. US Treasury yields are rising, which means the government faces higher interest payments unless it reins in the deficit. That's adding to investor concerns about American financial stability. And this is where the euro benefits. Around 75% of central banks now say they plan to reduce their dollar holdings. Many are turning to gold, but they're also diversifying into other currencies like the Canadian dollar, Australian dollar, and Chinese yuan. In that mix, the euro stands out. It's stable, backed by a strong economic zone, and still central to global trade. So yes, it's technically in third place, but as faith in the dollar fades, the euro's role as a global reserve currency may only grow stronger. And when they start selling their gold, then it might be replaced, you guessed it, euros. That being said, the euro is very far from replacing the dollar anytime soon. It's just too powerful. But that could change in the coming years and decades, if Europe prepares in 5 key areas. First, full single market liquidity. In the eurozone, bond and money markets exist, but they're fragmented. Germany issues bunds, France has OATs, and Italy has BTPs. Those are bonds backed by countries themselves, and not the euro area. There's no unified Eurobond market. However, a major milestone was reached in 2020 when the EU signed off on a historic up to €800 billion Next Generation EU fund. For the first time, the EU borrowed collectively on the capital markets, a historic step towards acting more like a true economic union. However, in the USA, this is common practice. There's one massive liquid market for US Treasuries, the world's go-to safe asset. With different bond terms that are available regularly in large quantities, there's just no competition with the EU. So, our verdict, orange. The EU is only making moderate progress. We're building tools like the historic EU Recovery Fund, but they're ad hoc, temporary, and don't yet amount to a true permanent Euro bond market. Second, stronger political and fiscal unity. In the Eurozone, there's no federal treasury, no EU finance minister. Fiscal policy are still very national. Every major move, like joint borrowing, needs 27 sign-offs. The EU basically still struggles with slow, divided decision-making. Next-Gen EU was a big step, but unlike the US treasuries, these Eurobonds aren't issued regularly or at scale. In the USA, Congress controls a unified federal budget. The Treasury can act swiftly in a crisis, with the Fed backing it. And the Fed can issue joint debt without needing a bunch of votes every time. So our verdict, red. We are far from it. Without deeper integration and qualified majority voting, the euro remains politically fragile. Third, expand geopolitical influence. The EU is a soft power giant, big on trade, diplomacy, and climate policy. But it lacks hard military power and a unified foreign policy. The US, on the other hand, backs its dollar with unmatched military presence, strategic alliances, and global dominance in tech and finance. So our verdict here is orange. Only moderate progress, not quite there yet. Reserve currencies benefit from global power, military, diplomatic, economic. The EU is growing, but far from the US. Fourth, fully integrate capital markets. The Eurozone is still a patchwork, different tax rules, insolvency laws, and regulatory regimes. Investors face many hurdles moving money across borders. In the USA, there's one capital market, easy to move capital, list companies, or access credit across all 50 states. Verdict, orange, improving slowly. The Capital Markets Union is on the agenda, but far from complete. And finally, a strong and credible central bank. The European Central Bank's independence and focus on price stability are major strengths. Investors trust the ECB. The American Federal Reserve is a long-established global leader, but the ECB is actually catching up. So our verdict here is green. The Eurozone really shines here. Overall, the euro is on the right path, but faces major political and geopolitical hurdles before it can seriously challenge the dollar. Let's be clear. The euro won't replace the dollar anytime soon. The US still leads with the deepest markets, safest assets, and unmatched power. As for the yuan, China would love the yuan to rival the dollar, but with tight capital controls and shaky investor trust, it's nowhere near ready. Without open markets and strong legal transparency, it simply can't offer the stability needed for a true global reserve currency. But the dollar's decline is a massive opportunity for the euro to boost influence, strengthen the economy, and unite the EU. The key issue is European bonds at scale. Next-Gen EU was a great start, but a one-off. We need this more regularly with predictable auctions, monthly like the US treasuries. That builds trust and attracts central banks. And growing the euro isn't just economic. It would unify us fiscally and boost global influence on our terms. for financial independence from Trump, China, or petrostates. It starts with a strong euro. Now, if you want to reduce your risk of scams and reclaim a bit of digital privacy, head to incogni.com/EUMadeSimple or use the link in the description for an exclusive 60% off their annual plan. Thank you so much for watching, and thank you to our presidents, Jan, Schauke, Kristen, Peter, HGVD, Daniel, Unite Europe, Stefan, and Mr. Probot. See you in the next video.